So Joe, let's kick this off with you. Your team has described global growth as frustratingly fragile for some time. Can you tell us what you mean by that?
Sure, thanks, Noni. Well, fragile I think is appropriate because it really speaks to very weak growth where we are very unlikely to see, and we've had this view for some time, very unlikely to see acceleration in any major economy of the world. Fragile also associated with high volatility at times in the financial markets. I think we're already seeing that. And also just characteristic of in a low growth world, risk skewed towards the downside. Some economies in recession, others, I think, staving it off, but the risk, much more than any acceleration in growth, we're hard pressed to see any acceleration growth in any economy in the world, really, I think, encapsulates our fragile theme. Frustratingly, I think we believe is appropriate because, again, we're 7 to 8 years removed from the financial crisis. Policy making across the world has been extremely stimulative, very aggressive, and yet we still have this low growth trend environment. So frustratingly fragile, I think, is characteristic, and I think this sort of volatility and concerns over growth will persist. I mean, fair, Roger?
Yeah, absolutely, and clearly, I mean, we see these periods of volatility at turning points, such as Fed tightening and China's transition with the policy they're implementing. But for example, in the case of the U.S., we're talking about the economy that is stronger within this context of fragility that we're discussing among the developed markets. But yeah, fair point. I mean, we are not expecting acceleration. If anything, actually, it would be deceleration back to trend. If you look back at 2015, was a year in which the U.S. economy grew above trend.
The job market,
job market was tightening, doing really well. And if anything, we expect kind of taming down to a normal trend of about 2% growth, with the labor market remaining in the current level of 5% unemployment, if not even a little bit lower. So that's optimistic within the context of a very fragile
with perhaps
global
maybe
economy.
some growth scares, manufacturing, trade.
Totally.
Yeah, absolutely.
Yeah, I think probably if you think about the word, emerging market is probably at this moment the weak link, right? I mean, including China, we expect continued deceleration, and many of the emerging markets are in recession already, and will continue to be so in 2016. I think not just from for this year, and if you think about them, they enjoy this kind of Goldilocks scenario for the past decades. They have cheap dollar funding, and they have high commodity price that's benefiting from China. And now if you think about it, I mean, U.S. growth is weaker, and Fed is tightening, and China will continue to slow down and also rebalance away from the commodity intensive activities. So that just shows you how difficult the time emerging market is.
And I think to Jen and Roger's points, the one area where we're, I think, fairly distinctive relative to, I think, other outlooks in the marketplace is really around our outlook for emerging markets as well. We don't necessarily anticipate any sort of cyclical bounce, because the currencies have fallen to adjust to help. Some would argue lower commodity prices would help those emerging markets that that would benefit from lower commodity prices, but we see a structural sort of adjustment that is needed. That, to be fair, many developed markets had to painfully work through the United States with high consumer debt, Europe as well. So I think a distinctive episode for the next few years will be that gap between emerging market growth and developed market growth will probably be the smallest that we've seen in almost 2 decades. That will be a different mindset for investors and for the markets. And so a lot does rest on the resiliency of major developed markets. We believe more likely than not that will persist, but it's because of that turbulence that we will, this sort of fragility is not going away, because we will not see that acceleration from emerging markets.